Good morning, traders. Manny Cabrera, co-founder of MDC Trading Academy, with today's pre-market forecast for Wednesday, January the 18th. Quickly to our news items today. On our news items today, 8:15 ADP non-farm roll payroll that happened already. Employment change. Apparently, it was expected at 160. We actually had 202, so that's good news. We have the president speaking tentatively today. There's no specific time, so we have to keep an eye open for that. I'm sure that's in reference to the situation down in Iraq. And here at 10:30, we have crude inventories. I mentioned to you earlier this week about this report. Since that whole thing in the Middle East is happening right now, this may have some sort of a sensitive reaction in today's market. Let's quickly jump to our analysis. We jump to our daily chart. As we can see, first let's just jump quickly to our average volume. We are at 1,090,000, which is a little under what we're looking for, but we're pretty close to 1.1 million. Our ATR is over 14, so that's why we're having tough volatility. Look at the range on this bar right here. Look at the range on this bar. We have a low of 31.81 and a high of 32.46. That's a whole bunch of points there, guys. So we have a huge amount of volatility. We came down all the way down to the 20 SMA. Market broke clearly through it, but quickly has recovered, and that's where we find ourselves right now. As we can see at another long-term chart here, we can see the market inched its way back yesterday. Here's where we were. We went above this area, the solid area of support that we've been having here, support and resistance area. Market broke below it, roared back, broke above it, broke back into it, oscillated in between there, broke clearly through it to establish a new low. By the way, here's the 20 SMA right here. Market breaks clearly through. Now we're in the process of recovering. As you can see, we clearly went right through it, heading to our next price level here at 32.54 area. 32.54 area is our next level if we continue to the upside. As we can see here, we are currently just broke earlier this morning the intraday high of yesterday. We had matched it in the previous pre-market. Now we retraced and we went back to it again. This trend line is holding the market really well. Now, what are we expecting here? If the market continues to break through, attempts and breaks through the intraday high, we're expecting a little bit more continuation to the upside. There's a lot of down potential here. Just remember that this is a very fluid situation that we have in the Middle East. So the market is being very cautious here. So be very careful. Once we break this trend line here, we're probably going to make a beeline right down to this lower section, which was yesterday's intraday low. So keep your eyes open for that price level. So these are the two price levels to keep your eye on this morning, at least initially. It's going to be the intraday high, intraday low, which is a lot of activity here. We have moved a little higher since, so let's just take a quick fib here. As we can see, the market can retrace back to the 23, or to the 24% right about here. We can retrace all the way down to this level down here at 32.06 and still be considered a market that has potential to make a continuation after a long recovery. If you notice, a lot of our Fibonacci areas, particularly this golden area here, that lines up with a lot of important price points. So keep your eye open for those levels. The initial moves in the market the last couple of days have seemed to be false. In other words, we expected the market to move lower. I expected, me personally, yesterday and the day before that, and the market eventually moved up higher. So keep your hands off the mouse. Wait for the initial reaction. Keep your eyes on the news, expecting the president to speak at any time, and please take your hands off the mouse as soon as the president starts to speak, because it gets a little dicey out there. Let me know if you have any questions, and we'll talk to you soon. Bye.